Hello, and welcome to another edition of Well Balanced, Vector Wealth Management's podcast and video series. Today I've got David Moser in the house, and we're going to be talking about short-term lending solutions. First, a little bit of introduction. David's a wealth advisor. He's been at Vector for over 10 years. Welcome.
Yes, thank you for having me, Ezra. Today, I am excited to talk about utilizing your relationship with Vector and turning your Schwab investment portfolio into your own bank. Prior to discussing some of those options through Schwab and Vector, as a side note, I do realize there are other short-term financing options outside of Schwab, such as a HELOC, also known as a home equity line of credit. You could get a direct loan from a bank or even borrowing from a family member. That said, this podcast is simply to review easy and convenient solutions using your investment portfolio at Schwab.
Right, and we didn't even mention high interest credit cards because that is not a good option for anybody.
Correct.
Right, maybe in an emergency, but who knows? Well, let's get into the short-term options that clients have through Schwab, and Schwab is our custodian we use to custody the assets.
You are correct. So there's really three main options for short-term financing through Schwab, and in no particular order. Option one would be a 60-day rollover. Option two, there is a margin loan. And option three, there is a pledged asset line. Each of these options have their pros and cons. So first, again, I'll talk about option one in no particular order. Is called a 60-day rollover from an IRA. Now, this is a feature that is unique only to IRAs. You are allowed to withdraw money from your IRA once every 12 months, not to be confused with a calendar year. It truly is once every 12 months. And as long as you pay it back within 60 days, it is a non-taxable event. This could be a very good solution if you are purchasing a new home and you close on it, but your existing or old home doesn't sell for, let's say, a month later, and you don't have the cash to make the down payment on your new home. So, for example, if you had $1 million IRA account and you needed $200,000 for a down payment, Jason and our portfolio management group and his team, all we would do is sell $200,000 worth of securities, transfer you the $200,000 to put as your down payment, and then when your old home sells, again, it has to be within 60 days, we can transfer that $200,000 back, and it would be a non-taxable event.
Yeah, it seems like the key here is making sure that you've got a plan to pay it back or accept the tax consequence.
Correct.
Let's get into the second option, margin loan.
Yes, so a margin loan is a feature that is only available to brokerage accounts. The 60-day rollover, again, that was only for IRAs. The margin loan is for brokerage accounts. An example, just for a refresher, brokerage accounts like an individual account, a trust account, or a joint account. And a margin loan, you are essentially borrowing from Schwab up to a certain percentage of the current value of your brokerage account. So as a general rule of thumb, you can borrow from Schwab up to 50% of your account value. One additional difference between the 60-day rollover and obtaining a margin loan through Schwab is, remember, if we go back to that scenario where you have $1 million IRA and we sell $200,000 worth of securities, with a 60-day rollover, again, you have to sell the investments. With a brokerage account, because you're getting a loan, you don't have to sell any of your investments. So your portfolio stays intact, which is a big advantage, because if we were to sell securities in a brokerage account, remember, we might have to pay tax on any capital gains. So this is a way to get liquidity without having to sell investments in your portfolio. The other thing that I like about margin is you can access the funds very quickly. There's no credit check, and there's no big long loan approval process. So it could be a very good solution for either an immediate cash need, or again, short-term liquidity for maybe a few months. Again, could go to the buying a home example. If we want to put a down payment on a home, we can certainly do so. And then when we get a large cash from our old home sale, we can use that to pay off our margin balance.
That sounds like a great solution and a great use case. I'm assuming there's an interest rate or a cost for this loan.
You are correct. Because you are borrowing money from Schwab, they do charge interest on the margin loan balance. So the interest rate, it's not fixed. It's not like a 30-year fixed mortgage. It does fluctuate. And there's two main components to calculate the total interest rate. So one, there's a fixed interest rate, and then there is called a spread. A spread is simply a variable rate. It's usually tied to a benchmark like the federal funds rate. And although there are borrowing costs, the nice thing about being a client of Vector is that through our relationship with Schwab, we do have a reduced and negotiated margin rate.
Let's get to the pledged asset line, that third option.
Yes, so the third and final option is a pledged asset line. It is another form of a loan through Schwab, and kind of think of it as like getting a mortgage, but against your portfolio. So there are a lot of similarities to margin as well as some differences. A pledged asset line is very similar to margin in the sense that this borrowing option is only available to brokerage accounts. So if you don't even have a brokerage account and only IRAs, well, margin and pledged asset line, those aren't even financing options for you. Additionally, very similar to margin, you don't have to sell your investments, which again would avoid having to potentially pay tax on any capital gains. And then lastly, the interest rate, it's also variable like margin. It has those two components, both the fixed as well as the spread. That said, as I mentioned, there are some differences. So to obtain a pledged asset line, there is a loan application and approval process. So getting this feature in place does require paperwork and more work on the front end, but with our client services team, we can help coordinate all of those forms necessary to get established on your Schwab brokerage account. Secondly, pledged asset lines are generally for larger amounts, so the minimum loan actually starts at $100,000. And then the last one is you are actually able to borrow a larger percentage of your account. So with margin, I shared it's usually 50%. With a pledged asset line, you can typically borrow 60 to 70% of your total account balance.
Are there any restrictions?
There are certain features that you can have on brokerage accounts, like check writing. You can even get debit cards that are attached to your Schwab brokerage accounts, or there's some bill pay privileges. These features are not available to you if you have a pledged asset line account.
Who is a good candidate for using this tool?
Yeah, as I mentioned before, it's typically for if you need a larger loan balance and you need to borrow more than a few months. So like a business expansion or possibly a commercial real estate bridge loan would be good examples.
So we've got three great options for people: the 60-day rollover, the margin, pledged asset line, kind of depending on the scenario, and brokerage account versus IRA, et cetera, et cetera. Should we go into risks and drawbacks?
Yes, there are risks or potential drawbacks for all three of these options. Number one, with the 60-day rollover, as I mentioned before, it's a short time window. So you have 60 days to get that money back into the IRA, or it's going to be a taxable event. Additionally, you do need to sell the investments in order to fund your withdrawal. So you could miss out on potential appreciation in the market. Both margin and pledge asset lines, they have a very similar risk. Again, as I mentioned, they allow you to borrow up to a certain percent of the account. But if the account value drops, you might have what's called a margin call, which means Schwab will require you to either put money into the account or potentially sell some of the investments to get your loan balance, in the case of margin, back down to 50% of the account value.
Nice. These are all good to know kind of risks going into it. And again, it seems like it's all just seeing which is the right solution at the right time. Any closing thoughts?
All three options, margin, pledge asset line, and 60-day rollover, they're great tools to have in your wealth management toolbox. It's not a one option fits all. It is truly a case-by-case basis. So at the end of the day, if you or someone you know is in the need for a short-term, easy and convenient lending solution, give us a call and we'd be more than happy to walk through what tailored solutions are right for you based on your unique financial needs.
That's a perfect spot to end it. Thank you, David. Thanks for being a part of the show and sharing your thoughts on all this.
Yes, thank you for having me.
All right. We'll see everyone else on the next pod. Take care. Hey, thanks for listening to our podcast. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or